Hello everyone, welcome to today's session. So today we are going to continue chapter 13. Okay, a bit we will be solving questions, so we will be solving practicals on that particular part, and then we will move to the chapter 14. Okay, I hope everyone has revised till now or went through chapter 13's text study material. Okay, because when I will be discussing okay what we have done already discussed. We will be taking practicals, and then we will be moving to chapter 14. Okay, if anyone has any doubt with respect to any previous questions, any previous topics, they can ask. Okay, you can just write it down here in the comment and I'll take it up. Okay. Any questions or any doubt you can post in the chat box or in the question box, and then I will take it up from there. Okay, so sorry. So let's continue the discussion on chapter 13. Now, when yesterday we were discussing chapter 13, we were discussing about group audits, what to do, what not to do, what to understand, and what is the auditor's responsibility in the group audits. Okay. Now, let us see few questions which are already given in the study material, and then we can proceed. Okay. Let me bring the study material and we can discuss some questions from the study material first. Then we will discuss the additional questions, and then we will proceed. Okay. Let us see. Parent Limited acquired 51%. Okay. Parent Limited acquired 51% shares of Child Limited during year ended 31/3/2021. During the financial year 21-22, 20% shares of Child Limited were sold by Parent Limited. Parent Limited, while preparing the financial statement for the year ended 31/3/2021 and 31/3/2022, did not consider the financial statement of Child Limited for consolidation. As a statutory auditor, how will you deal with? So your job is to comment on how will you deal with this particular situation. How will you deal with this particular situation? 51% shares were there on 31/3/2021. However, Parent Limited sold these shares during financial year 21-22. How will you deal with this situation? Come on, guys. Come on. How will you deal with this situation? Simple. It's a question on the control and the shares. Okay, and accordingly you need to answer consolidation, please. Come on, guys. So this is a question on control. Okay, and then based on the control, you need to answer about the consolidation of provisions. I'm waiting for the answer. there is a change in the holding percentage. Okay. Now, as an auditor, how will you deal with this situation? Because there is a change in holding percentage, and for the 2 years, Parent Limited did not consolidate Child Limited for 2 years. Come on, guys. Okay. Okay. Good, Suraj. Yes. Good, Viraj. Good, Suraj. Yes. Absolutely correct. Anyone else would like to try? The question is that parent acquired 51% shares of child during the year ended 31/3/2021. During the financial year 21/22, 20% shares of the child were sold by the parent limited. Parent limited, while preparing the financial statement of year ended 21 and 22, did not consider the financial statement of child for the consolidation. How will you deal with this particular provision? Any exemption that will apply to parent limited? Anyone, any exemption that might apply to parent limited? Okay, Charu. Yes. But any exemption will you apply to the parent limited? Any of the exemption that you might think that okay, this might be applicable to parent limited? Any exemption that you think might be applicable to parent limited? Okay, Suraj. Mansha, can you specify which para you are referring to as of now? Okay, Belam Kunda. Very good. Okay, Tanisha. But based on the given information, do you think any exemption will apply? Based on the given information? Okay. So let me go to those three conditions because a lot of people have doubt with respect to those three conditions and the wordings of those three conditions. Okay. Now the three conditions were: number one, it's a wholly owned subsidiary or a partially owned subsidiary of another company, and all its other members, including those not otherwise entitled to vote, have been intimated in writing, for which the proof of delivery of such intimation is available with the company, that they do not object to the company. They do not object to the company for not presenting consolidated financial statement. Means the thing is that they are, not objecting, first of all, for the not preparation of the financial statement, plus all the members other than the holding, because holding will be the majority member. Okay. So that's why the term is used, other members. Okay. So other members, excluding holding, they do not object and they have been intimated for that. Number one. Number two, it's a company whose securities are not listed or either are not in process of listing on any stock exchange in India, outside India. Third, its ultimate or any intermediary holding company is preparing consolidation and filing with the registrars as per the applicable accounting standards. When these three conditions are satisfied, a company can take an exemption from preparation of consolidated financial statement as per Rule 6. Okay. Now, in the current scenario, if you see here, the company is having 51% shares during 31/3/2021. We don't have any other information about, parent, subsidiary, or with respect to any ultimate or intermediary holding, we are preparing the consolidated or not. So we will not apply that exemption because we don't have the information as of now. But what Ind AS 110 says about the exemption, because remember, I said that, okay, Rule 6 has the exemption, no doubt. But simultaneously, there is one more provision to Rule 6, which says that if any company, okay, if any company is exempt by way of accounting standards, okay, then that company is also, will be counted as an exempted company who is not required to prepare consolidated financial statement. Okay. And in that case, we saw para 4 of Ind AS 110. Same conditions in para 4 also. And 4B was talking about investment entities. 4A, 4B. There were two paras in Ind AS 110 that we discussed about the exemption. But there is nothing about the temporary control. Okay. There is nothing about the temporary control. And the reason for the same is that particular part of temporary control, okay, is not in Ind AS, is not in Ind AS, but it is in basically AS 21. If I am correct, there is a paragraph on the exemption of temporary control in AS 21. That is, just let me check. Yeah, para 11. If you talk about para 11 in AS 21, not in AS 21, where it says that control is intended to be temporary. So a subsidiary should be excluded from consolidation where control is intended to be a temporary, because subsidiary is acquired and held exclusively with a view to its subsequent disposal in near future. If that is the case, then yes, exemption is applicable, but that is in AS, not in AS. And in our question, we have parent limited. So basically, we will assume that Ind AS is applicable, not AS is applicable, and hence the company is required to consolidate from the date when the control established till the date and when parent has the control over the entity or loses the control over the entity. Clear? Any doubt? Any doubt? Okay. Let's see another question. Very good one. See, Kajal is nearing completion of audit of consolidated financial statement of Rubik Paints and Chemical Limited. She requires written representation from parents, management on the matters material to the consolidated financial statement. What specific matters such written representation can include? So, can anyone list certain matters that can be included in the written representation? Can anyone list down certain matters that should be contained in the written representation? Okay, about the consolidated financial statement. See, when I told you about consolidated audit of consolidated financial statement, it is in the same way. Our reporting also in the same way. So the way we take written representation in the standalone financial statement, same way we have to take written representation for the consolidated financial statement. But having said that, you on the similar lines, you need to list down the matters that are required to be enumerated in that. So, which are those matters? Come on, guys. Which are those matters? Come on, guys. Charu, you need to refer why NDS is applicable, not AS. I would suggest refer to the the company's Indian Accounting Standard Rules 2015. Over there, if you go for paragraph 4, you will find the applicability of the Ind AS, and there you can see any company, its holding, its subsidiary, joint venture. Okay, they have to apply for the Ind AS. What information you will ask, okay, or what information you will, you would like to include in your written representation, which management will provide to you. What you are looking for when you are asking a written representation with respect to the consolidated financial statement. So there is one doubt with respect to the previous question. If nothing is mentioned in the question, do we have to assume that there is the ultimate control over the subsidiary even after the sale of part of its shares of that subsidiary? Answer is no. If nothing has been mentioned, if the percentage has been mentioned, go by the percentage. After the sale of the percentage or stake, assume the control is no longer there. Very good, Mancha. Yes. What will you include in your management representations? We have discussed that. And trust me, I have discussed you same things you will include in your written representations. Now, you need to answer written representation with respect to your consolidation. Very good, Tanisha. Yes. What else? Come on, guys. What will you include in your written representation? Come on, guys. Written representation. What will you include? Okay. Very good, Suraj. Very good, Mansha. Very good, Tanisha. Yes. Let's see what we can include. Remember this particular discussion we had? Like, okay, what will be the first step that you will follow for the consolidation and the steps and procedures that we discussed, first, second, third, fourth, and everything. So over there, I wrote something, the auditor needs to look into something. First, completeness of the component. So the same thing you will ask on the representation also. Okay, you will ask management to confirm the completeness of all the components. You will ask management to identify the applicable financial reporting framework of the parentee and all the adjustments that are required to be performed. You will ask whether all investments are performed appropriately. So you will take in confirmation for that management representation. You will ask for the related parties. You will ask for the whether the CFS are in compliance with the applicable financial reporting framework. So all these information that we discussed already in the last lecture, you will ask in written representation, and these are related to, okay, related to your consolidation. So the question was on specific consolidation. Okay. So what matters, specific matters regarding the consolidation can be included. So these were the specific matters that can be included. Okay. For written representation. Clear? Any doubt? Any doubt? Okay. Now, the next question that is there, let me take up one more question. Okay. So let's see one, big question on the consolidation. ABC Limited acquires 75% equity share of PBC Limited and DBC Limited on 31/5/2021. Okay, ABC acquired 75% of two companies, PBC, DBC. On 30/6/2022, ABC Limited also acquired 100% equity stake in ANO Limited Cyprus. It's a Cyprus entity. ABC Limited was fully owned subsidiary of XYZ Limited. Okay, so ABC Limited is a fully owned subsidiary of XYZ Limited. XYZ Limited was engaged in manufacturing of construction equipments and heavy automobiles. Okay. While preparing the consolidated financial statement for XYZ and ABC Limited, statutory auditors identified the following things. Number one, the inventory valuation and inventory provision accounting policy followed by XYZ, ABC, PBC, and DBC was different then the accounting policy followed by the ANO Limited. As per NDS 110, consolidated financial statement. If a member of a group uses accounting policies other than those adopted in the consolidated financial statement, for like transactions and even in the similar circumstances, appropriate adjustments are made to the group member's financial statement in preparing consolidated financial statement to ensure conformity with the group's accounting policies. Hence, management of XYZ Limited passed adjustment to align the different accounting policies in the consolidated financial statement. Okay. Second, the financial year of AANO Limited is calendar year 1st Jan to 31st December, where the rest of companies has 1st April to 31st March. Third, ABC Limited and XYZ Limited appointed CKC and Company Chartered Accountants as their statutory auditors, where PPC and DPC appointed NKL and Company their statutory auditors. However, ANO Limited was not audited by any auditor. ABC Limited's prime object was to invest funds of its shareholders for the purpose of capital appreciation and investment income. Following is the extract of the financial statement of all companies, all entities, XYZ, ABC, PPC, DBC, ANO. So they have a revenue, they have total expense, they have a total asset, they have a net cash outflow. Okay. CKC company computed the consolidated materiality at 5% of the total revenue of XYZ Limited, ultimate holding company, that is 51.25 CR. Based on the above information, kindly answer the following question. The first question. CKC were of the opinion that they are required to prepare consolidated financial statement for ABC and XYZ Limited. However, management of XYZ Limited contended that they should prepare consolidated financial statement of only ABC Limited, as it is an investment company. Kindly guide CKC and company with respect to the applicability of the consolidated financial statement. Come on, guys. So, you need to discuss about the applicability of the consolidated financial statement for XYZ and ABC Limited. And the information is given already on your screen that we discussed. Discuss the requirement of preparing consolidated financial statement for ABC Limited and XYZ Limited. Come on, guys. Come on, guys, quickly. Come on, guys, quickly. Okay, Suraj, very good. Okay. Come on, guys. What else? So the question is, what is the requirement of preparing consolidated financial statement for ABC and XYZ? So you need to tell me whether ABC and XYZ are required to prepare the consolidated financial statement or not. Whether ABC or XYZ are required to prepare the consolidated financial statement or not. You need to consider all the information which is given in this question, which is present on your screen. Okay, you need to answer accordingly. Come on, guys. Come on, quickly. So you need to tell me the requirement of ABC and XYZ with respect to consolidated financial statement. Whether they are required to prepare or they are not required to prepare. See, these are the basic questions that we are discussing as of now. Basic question. And I expect that everyone should answer to this at least. Because see, this is the basic. If you are not able to answer this question, then in that case, trust me, you need to revisit the chapter. In that case, you need to revisit the chapter because that is a basic question and the first question that I'm asking. Correct, Bellam code. Correct, Bellam Konda. Very good. Okay, so let me tell you the answer. I'll give you the options. Let's not go to the answers. I'll give you the options. And then you can take one answer from that. Okay. What is the first option? Subject to the other provisions of Rule 6 of Companies Accounts Rule 2014 for the company of its for a company, if it is ultimate or intermediate holding company files consolidated financial statement with the registrar, which are in compliance with the applicable accounting standard, then the company is not required to prepare the consolidated financial statement. Subject to the other provisions of Rule 6 of Companies Account Rules 2014, for a company, if its ultimate or any intermediary holding company does not file consolidated financial statement with the registrar, which are in compliance with the applicable accounting standard, then the company is not required to prepare CFS. Subject to the other provisions, for a company, if its ultimate or intermediate holding company files CFS with the registrar, which are in compliance with the applicable accounting standards, then that company is also required to prepare CFS. Subject to the other provisions, for a company, if it is ultimate or holding company does not file CFS with the registrar, which are in compliance with the applicable accounting standards, then that ultimate holding company is required to prepare CFS. So what is the correct option? Then what is the correct option, guys? Now you need to choose one correct option. That's it. Now I think it will be pretty much easy. Okay, Shruti. Good, Tanisha. Good, Mancha. Okay, Shruti. No issues. Very good, Uday. Good, Suraj. Anyone else would like to answer? Okay, let's discuss the answer. See, let's start with B. So what B says that subject to the other provisions, okay, for a company, if its ultimate or intermediate holding does not file consolidation, it's talking about not filing consolidation. So ultimate and intermediate is not filing consolidation, then the company is not required, which is incorrect. So the first, so remember out of the three conditions, first one of the condition is if ultimate or intermediate holding company is filing consolidation, consolidated filing statement, financial statement, then only the exemption can be granted to the company. Okay, otherwise exemption cannot be granted to the company. That's why the B is incorrect. Let's talk about C. For a company, if it's ultimate or any intermediate holding company files CFS, okay, then the company is also required to file. So intermediate and ultimate is filing, okay, then that company is also required to file. Now these again, so the exemption talks about if ultimate and intermediate are doing it, subsidiary is not required to do or the company is not required to do. That's why this is also incorrect. Same way here, if you see that the company or ultimate or intermediate does not file, then the company has to file. But here in the question, what is it given? Then that ultimate company is required to prepare. No, that is not the thing. If ultimate or intermediate are not filing, then ultimate holding company is required to prepare, then doesn't make a logic. So that's why this is also incorrect. So correct option is your option A, which says that yes, if ultimate or intermediate holding is filing, then company is not required to file. Clear? Any doubt? Any doubt? Any doubt, guys? No? Okay. Let's proceed to the next question then. Okay. So next question is CKC and company were of the opinion that there is no need to audit the adjustment passed in the consolidated financial statement for different accounting policies pertaining to the valuation of inventory and provision, as this is not part of the original financial statement. Kindly guide with respect to the audit requirement for consolidated financial statement. So they are talking that no need to audit the adjustment passed in the consolidated financial statement for different accounting policies pertaining to valuation of inventory and provisioning. Is this correct? Is this appropriate? Come on, guys. Is this appropriate? If yes, then the reason. If no, then again, reason why. What should be the appropriate way? I'll give you answers also. You can select answer also. I'll give you the options. Select one options from the given ones. Come on. You need to select option also. Come on, guys. What would be the appropriate option from the given ones? Come on, guys. Okay, Tanisha, very good. Okay, Suraj, yes, very good. Good, Mancha. Good, Shruti. Yes, so the correct answer over here is A. There is a need to audit the adjustment passed in the consolidated financial statement for different accounting policies pertaining to the valuation of inventory and provisioning, because understand these procedures, or audit of these adjustments will give comfort and will help auditor to reduce the risk and at the acceptably low level for the consolidated financial statement. Okay, for the consolidated financial statement, that will help the auditor to reduce the level of risk. Clear? That's why the correct answer will be option A. Very good. Okay, let's talk about next question. XYZ Limited passed necessary adjustment to align the financial statement of A&O Limited that were drawn up to the different reporting dates compared to the financial statement of XYZ Limited. CKC and company were of the opinion that such adjustments are not required to be audited, and they need to audit the original financial statement for the period ending on 31st December 2021. Kindly guide the CKC and company in the auditing of consolidated adjustment for different reporting dates. So first of all, you tell me what is the requirement with respect to the auditing the consolidated adjustment with respect to different reporting date. Come on, guys. So what is the requirement with respect to auditing the adjustment, consolidated adjustment with respect to the different reporting dates? Come on, guys. What is the requirement? Quickly. What is the requirement with respect to auditing the consolidated adjustment with respect to different reporting dates? Very good, Mancha. Very good, Tanisha. Yes. Come on, guys. Okay. Good, Tanisha. Yes. Anyone else? What is the requirement with respect to auditing the consolidated adjustment for different reporting dates? Come on, guys. Okay. So let us see the options. So the options are A. The financial statement of the component used in the consolidation should have been drawn up to the same reporting date as that of parent. If not practicable to draw up the financial statement to such date, accordingly, those financial statements are drawn up to a different reporting dates. Adjustment should be made to for the effect of significant transaction or other events that occur between those dates and the date of the parent's financial statement. The financial statement of the component used in the consolidation should not be drawn up to the same reporting date as that of parent, as it not practicable to draw up to the financial statement to such date. Accordingly, those financial statements should be kept as it is. The financial statement of the parent used in the consolidation should be drawn up to the same reporting date as that of component. If not practicable to draw up the financial statement to such date, and accordingly those financial statements are drawn to a different reporting date, adjustment should be made for the effect of such significant transactions or other events that occur between those dates and the date of component's financial statement. And then the last one, this the financial statement of the parent and component used in the consolidation should be drawn up to the end of calendar year, irrespective of their reporting dates. Accordingly, necessary adjustment should be made for the effects of the significant transaction or other events that occur between those dates. So which answer do you think is the correct one? Which answer do you think is the correct one? Come on, guys. Okay, good Suraj, good Tanisha, good Shruti, good Uday. Yes, Mancha, very good. Very good, Bellam Konda. Okay. So, yes, as you said, the correct answer is A for this particular part. Because adjustments are required to be made, adjustments are required to be audited, and these adjustments will be made in the consolidated financial statement. Okay. Now, the next question is something with respect to the reporting part. Okay. Let us see. CKC and Company reported the following paragraphs in their audit report for XYZ Limited CFS under other matter para. We have audited the financial statement and other financial information in respect of 4 subsidiaries whose financial statement include total asset of this much CRs at 31st March ended 2022 and total revenue of this much crores and net cash flow outflow of this much crores for the year ended on this date. Kindly guide CKC with respect to the reporting requirements. Now, you tell me what should be the reporting requirement of in the audit report and what CKC has followed. Compared to what CKC has followed, what is the requirement with respect to the reporting? Come on, guys. Come on, guys, quickly. What is the issue here? What should be the scene? Okay, what should be the reporting requirement basically? So here the reporting framework is kind of reporting with respect to auditing. I'm talking about reporting in relation to the audit, not the financial reporting framework. So you need to answer accordingly whether the reporting in the audit report is appropriate or not. Come on, guys. Come on, guys. What should be the reporting requirement with respect to the audit report? Okay. No. So see, guys, understand the question over here. This is a paragraph which is mentioned in the other matter paragraph. You need to answer whether this paragraph is appropriate or not. So you need to answer with respect to the reporting requirement for the subsidiaries that has been included in the consolidated financial statement. We have discussed this particular point. I'm not talking about Caro. I'm not talking about the whole audit report. I'm talking about only the other matter paragraph that is there in front of you. So focus on the other matter paragraph only. Focus on the other matter paragraph only. Come on, guys. Okay. Very okay, Suraj. Okay, Belamgonda. Okay. Let me discuss the answer in detail. So I think you guys still are getting confused. Okay. See, what is the question over here? I'm talking about this other matter paragraph. The simple form is this correct? My question is this only. Is this other matter paragraph correct? Or would you like to do any modifications in this other matter paragraph? Is this other matter paragraph correct or not? Come on, guys. Where is this paragraph correct or not? Okay. And what would be that modification, Shruti? Very good, Tanisha. Then what would be the modification, Suraj, you will suggest? Very good, Tanisha. Yes, your answer is correct. Suraj, Mansha, Shruti, what modification you will suggest then? No, Belamgonda. There is a requirement in other meta paragraphs. That's something is required to be included. We have already discussed during SA 600. Remember, by discussing the SA 600, we discussed already this reporting criteria and reporting point. No, Shruti. No, Mansha. No. There is something more in this other matter paragraph that you are required to mention, which you are missing out. Come on, guys. There is something more which you are missing out. Very good, Robin. Yes, very good. No, Mancha. No, it's not about holding company information. Come on, guys. This is a very important point and that we should understand and we should remember this one. Very critical and important part. Okay, let me explain through with example. So this is the other meta paragraph of a real company in a real audit report. And what they are saying here is, this is a very important, they did not audit the financial statements. In other matter paragraph, we specify the financial statement which are not audited by us. Okay, we specify the financial statement which are not audited by us. Now, in this case, if you see, the auditor has mentioned we have audited the financial statement and the financial information in respect of 4 subsidiaries. However, in the start of the question, I told you that for there were 2 auditors, CKC and LNK and company. So these 2 companies are NKL company. This is not audited, and this is audited by CKC and company. So if PBC, DBC, ANO are not being audited by the CKC, then they should mention the same in other matter paragraph that we have not audited the financial statement of 3 subsidiaries, out of which 2 were audited by another auditor whose report were submitted to us, and they should specify the details of that subsidiary, the revenue, net cash outflow, total asset, everything. And one which is not audited, they should specify that this particular subsidiary has not been audited. The unaudited financial statements has been submitted by management to us. Okay, again, the details of that particular part showing whether it's a material or not material. Clear? Should be the part. This should be the thing that should be included in your other matter paragraph rather than saying that we have audited all the 4 subsidiaries. That will be an incorrect statement. This is an incorrect statement. We have discussed already this in SS 600. In last lecture, I have explained this multiple times, guys, and this is very critical point. Very critical. This is the reason I say constantly that please read the study material once. Please read the study material, because if you would read, then you will come to know that, okay, what is the actual requirement? Because I'm saying, okay, you listen to me over here, you discuss the questions we do, and that's it. But if you read after the lecture, your understanding will increase tremendously. Trust me. Clear? Any doubt till now? Any doubt? Any doubt, guys? No? Shall we proceed to the next session? Okay. Oh, next question. Okay. So the next question is NKL company, statutory auditor for the two of the subsidiaries, okay, contended that the materiality calculated by the CKCN company should have been based on the total consolidated revenue instead of revenue of XYZ Limited. Kindly guide CKCN company with respect to the correct base for the calculation of consolidated materiality. Now, in the question I earlier discussed that CKC and company computed consolidated materiality at 5% of the total revenue of XYZ Limited Ultimate Holding Company, that is 51.25 CR. So they took 5% of the total revenue of XYZ Limited. Now, okay, NKL company is saying that no, you should choose a total consolidated revenue instead of revenue of only XYZ Limited. CKC has taken only revenue of XYZ Limited to calculate the consolidated materiality. You tell me who is the correct one. What should be the correct approach over here? Who is the correct one over here? NKL N company or CKC N company? NKL is saying take the total consolidated revenue. CKC is saying no, we should take the ultimate holding company's total revenue for materiality. Who is the correct one? Who is the correct one over here? Come on, guys. Who is the correct one over here? Who is the correct one, guys, over here? Okay. Very good, Mancha. Very good, Robin. Very good, Mohammed. Okay, Mancha. Okay, Suraj. Okay, Tanisha. Understand, guys. Now, the thing is, whenever you are looking for the consolidated audit of CFS, okay, audit of CFS, obviously you will select and do procedures based on the number which are in the CFS. When I do audit of standalone financial statement, in the case of audit of standalone financial statement, I pick a revenue in that FS. So whatever total revenue given in that financial statement, I pick that one for benchmark, or I pick, for let's say for example, EBIT, or I pick profit after tax. Whatever benchmark I want to select, I select, but which is given in that financial statement, draft financial statement. Okay. Same way in the CFS, whatever numbers will be given in the draft consolidated financial statement, I will pick up that benchmark from that CFS, and by default that will be consolidated number. And I'll tell you the issue with both of the scenarios. Let's say I'll go with the CKC and company's opinion, and then VLK and NKL company. Okay. Now let's say for CKC company, let's say hypothetical example, XYZ, ABC. Okay. Then we have PBC, BBC. Okay, ANO. I'll just write only turnover in CRs. Let's say it has 200, 120, 80, 100, and 10. Now the total, okay, and XYZ. Now let's say the total turnover in this scenario, if you see 200, 120, 80, okay, 400, 500, 510. If I take benchmark as per NKL, it should be, benchmark should be 510 CR. But as per CKC, it should be XYZ company, which should be 200 CR. Let's say revenue, I took the benchmark 1% of the total revenue. So I multiplied by 1%. I took materiality as a 1%. See the materiality over here, 5.1 CR, and here 2 CR. Almost half, less than half. Okay, all near to 40%. Now, what will happen is, in this case, the lower the materiality, more audit is required to be done. Problem is not with doing more audit. Problem is not doing more audit. Problem is doing audit where it is not required. Understand that point. Audit where it is not required. For example, let's say for example, if I need to take a reasonable, again, this is professional judgment. It may differ from person to person. Okay. But the point here is that I may not be required to reduce my materiality at such a low level, because number one, I already have a comfort on individual these numbers, because I have audit report of these numbers. So I have already comfort and audited FS. Number two, I only need to see the adjustments and I need to see consolidation process. Okay, while auditing. So if I'll take this particular part or this particular materiality as my benchmark, in that case, I might need to go with all the adjustments, and I need to take more audit evidence than required. that might not be relevant and appropriate in the given scenario because I already have some comfort on the audit reports. That's why when I do audit in a consolidated environment, I usually take benchmark of the consolidated revenue because then only it gives me a clear picture, okay, whether a particular subsidiary, whether a particular entity is material or not. Let's say hypothetical example, if I again modify this one, ANO, and let's say if I say this has a turnover of 4 CR, assuming the total is same. I will not change the total. Okay. Assuming the total is same. I added 6 over here. The total will not change. Now, if you see this 4, if I talk about XYZ or CKC approach, it will say yes, ANO is material. But if I talk about NKL, it will say ANO is not material. And usually you need, this is again professional judgment, but usually the approach which is followed by NKL and company is preferred as used and adopted. Because ANO having 4 crore CR might be material for the XYZ, but for the group might not be material. And that is the approach that NKL is following, and that is the correct approach. Okay. I hope I'm clear. So the correct answer is here that approach of NKL should be followed with respect to the total consolidated revenue instead of individual ultimate holding company's revenue. Clear? Any doubt? Any doubt? No? If no doubts, then let's take a quick 10-minute break. After the break, we'll gather back and we'll continue the session. Okay? Let's take a quick 10-minute break. Welcome back. Let's continue the session and the discussions. Okay. So we have discussed chapter 13 in detail already. Okay. We solved the questions. Now I want from your side is to go and revisit the chapter, read the chapter after this lecture. And if you have any doubts, you can come up with your doubts. Okay. We will now move to chapter 14. Now, basically, chapter 14 is divided in two units. Okay. Unit number one is with respect to special features of audit of banks. Unit number two is special features of audit of NBFC. So, the chapter 14 is special features of audit of banks and NBFC. So, it has two units, one for banks, one for NBFC. Okay. So, first one is a bank one, second one is a NBFC one. However, I will first start with the NBFC one and then we will proceed to the bank one. Okay, so we'll start with the unit 2 first and then we'll shift to the unit 1. Now, let's talk about first with respect to the audit of NBFC, special features of audit of NBFC. Just let me open one file, notes file, so that we will simultaneously also prepare some notes accordingly. Okay, here we have. Now, what we are going to discuss over here, we are going to discuss about the registration of and regulation of NBFCs, audit procedures, audit checklist, auditors' duties, and auditor's report. We'll be discussing all these things with respect to the NBFC one by one. Okay, in detail. And this is an important part, important topic also. So I would like you guys to pay attention to this particular topic. Okay, and to pay attention to basically, to whatever we are discussing as of now, because it's an important topic. Okay. Now, when it comes to the NBFC, can anyone tell me first the laws and regulations that governs the NBFC? I'm talking about laws and regulations that governs the NBFC. I'm not talking only about audit, basic laws and regulations that governs NBFC. So let's say I have an NBFC over here. I need laws and regulations that governs the NBFCs. Which are those? If you guys can give me either a good name of an act or rule, please don't write only just vague act or names or rules. Try to be more specific on that. Very good, Robbie. Very good, Venkata. Very good, Tanisha. So first one is RBI Act. RBI Act and let's say other regulations of RBI Act. What else? What else, guys? Come on, guys. What else? Which regulation is there? Okay. Someone is saying SEBI. Okay, Suraj. Very good. SEBI Act and rules and regulations. SEBI Act plus regulations. Then Robin is saying Companies Act. Okay. Companies Act and rules. Very good. What else? Tanisha is saying FEMA. Okay. FEMA. FEMA Act and regulations. What else? So I have RBI, I have SEBI, I have companies, I have FEMA. What else? Come on, guys. What else? Come on, guys. Any other act, rules, regulations that you might think might be relevant for the NBFC? Okay, can anyone tell me some specific names of act and rules, rules or directions, basically specific names? Specific names. PMLA, okay, yes, PML is also there. Income tax is there, yes. So PMLA. Then you have income tax. Very good. Very good, Tanisha. Yes, custom excise and everything. Yes. Good, Tanisha. So for RBI Act, it is section 45 IA. Okay. Section 45 IA of an RBI Act. 45 IE, IA, both are applicable. Okay. I'll write 45 IA. Anyone, and if anyone can give me a specific name of rules, regulations, direction which are applicable for NBFC? Anyone? Any specific rules, directions which are applicable to NBFC? Any specific rules, direction that you might think relevant? Anyone, if anyone can give me any name? Okay, good Mancha, but that is not the correct full name. Okay, very good. So in Companies Act, we have Schedule 3, Division 3. Very good, Venkata. Okay, Tanisha, IT Act I think is not that much relevant over here. Basel Committee on Banking Supervision, but what of that particular Basel Committee? What you are referring here? So okay, let me tell you. When I talk about basically NBFC, okay, when I talk about basically NBFC, there are multiple rules and regulations which are applicable. Okay, we have seen, we have on our screen RBI Act, SEBI regulations, we have Companies Act, FEMA Act, PMLA, income tax, a lot of up there. Okay, RBI Act, if I talk about Section 45 IA, SEBI regulations, if I talk about there are LODR, ICDS, all these will be applicable if the NBFC is listed. Okay, Companies Act rule, because NBFCs are at the end companies formed under Companies Act. Okay, FEMA rules and regulations, because if they are dealing in the something foreign currency or foreign exchange, something like that, so that will be applicable. So there are various, okay, uh, acts, regulations, rules which are applicable to the NBFC. Now, why we are learning this particular part? Why we are seeing rules and regulations? The reason because is that unless and until you don't know the rules and regulations that are applicable to the NBFC, first, you cannot identify the applicable financial reporting framework. Number two, you cannot check the compliance with laws and regulations. Remember, SA 250. We need to check compliance with laws and regulations. SA 315, we need to understand the entity and its environment. So to understand the entity and its environment, you need to understand the laws and regulations which are applicable to a particular NBFC. You need to understand what are the requirements that the NBFC have to fulfill. Same, we will go to the banking. Okay. But these are the critical parts that we need to understand. And because that, because of this, we need to identify what are the rules, regulations, what are the compliance requirement, reporting requirement, financial reporting requirement are applicable to a NBFC. Then only you will be able to audit an NBFC. Okay. So understanding law regulation is very, very important. Very important. Okay. And earlier, there were two major, okay, regulations which were there. There were two major regulations with respect to NBFC, which were, we used to discuss multiple times. We used to provide, we used to, discuss those particular regulations and directions. Now, the thing is, with passage of the time, those directions have been merged with other directions. Those have been merged with other direction, and we will see that how it has been merged and what is the requirement as of now with respect to the new directions. Okay, but basically, when I talk about NBFC, there were three main important regulations that we used to discuss. Number one, it was master direction. Okay, master direction, that is non-banking financial company, that is NBFC, non-systematically, important, non-deposit taking company, non-deposit taking, okay, company, RBI, Reserve Bank, directions 2016. So we call these direction is a non-deposit taking directions, because these are applicable to NBFCs which are not accepting deposit, which are not accepting deposits. So non-systematically important, non-deposit taking companies direction. And I'll explain you what is a non-deposit taking, non-systematically important. I'll explain everything in detail. Don't worry on that. Okay. So we used to call this, that's a NBFC ND regulations. They were known as an NBFC ND regulations, non-deposit taking regulations, basically. Non-systematically important, non-deposit taking. There was another master direction with a similar name, master direction NBFC. Okay. But it was for systematically important, okay, non-deposit taking company and deposit taking company. And systematically is important, non-deposit taking, okay, company and deposit taking company. Reserve Bank directions 2016. So NBFC, this is we used to call as an NBFC SI&D regulations. NBFC SI&D, okay, or you can say SI D or ND regulations. We used to call NBFC SI regulations. You can understand them. Okay, or whatever name you want to suggest, that is there. But usually we used to call it NBFC SI regulations. Now, these were the two important regulations which were there since 2016 for NBFCs. I'm just explaining from the perspective of RBI directions and RBI provisions which are applicable to NBFC. Very important regulations. They were, they were there till 10th December 2023. 10th December 2023. Oh, 10th November 2023. Now, 10th November 2023, a new master direction was issued. Which was Reserve Bank of India. Okay. Reserve Bank of India, non-banking financial company, NBFC, master direction of Reserve Bank of India and NBFC, or you can just skip it out this one to bring the consistency. Just let me. NBFC, master direction NBFC, that is scale based regulations. Directions. Scale based regulation direction 2023. Okay. So till November 10, 2023, these were the two important directions which were issued by the RBI on NBFC. The first two. But the third one was issued on after 10th November 2023. Okay. Which substantially amended the first two, and a new set of directions came into the picture. Okay. These new set of directions which have came into the picture basically has changed the structure of NBFC a bit. So we need to understand how NBFCs were also structured. So earlier, what was the scenario with NBFCs is, okay, NBFCs were divided in different categories. NBFC categorization. So NBFCs were divided in multiple categories. So one was ICC, that is ICC NBFC, that is investment and credit company. Another was IFC NBFC, that was infrastructure and finance company. Then it was CIC NBFC. CIC is a core investment company. Then it was IDF NBFC. I'm just writing the short forms because already these full forms and the description is already given in your module, this one. So these are the NBFC categorization. Okay. Then we used to have MFI NBFC. Then we used to have NBFC factors. NBFC factors are also a type of NBFC which is in factor business. Okay. Then we had NBFC NOFHC, that is non-operative financial holding company as an NBFC. Then we have other NBFCs, which were like, asset finance company, loan, mortgage, and multiple types of. And all these NBFCs were either, all these NBFCs were either divided in two categories. Either they were deposit taking or non-deposit taking. When I talk about deposit taking, we call it NBFCD. When I talk about non-deposit taking, we call it NBFC ND. But the non-deposit taking again were of two categories. One was systematically important. One was non-systematically important. Now, the one which was non-systematically important, we still used to call these NBFCs as NBFC ND because neither these are deposit taking, neither these are important ones. But the NBFCs which were not taking the deposit but were important, we used to call as NBFC NDSI, that is non-deposit taking but systematically important. So these NBFCs were important but they were not taking the deposits. Okay, and on the other side we have NBFD, that is deposit accepting. So all the categories that we have seen here, based on function type basically or business type. This is business type. These business type were either categorized on the basis of deposit taking and non-deposit taking. Okay. Any doubt till now? Any doubt? Okay. My next question is, these were the directions that I was talking about, and I was talking about one important part is section 45 IA. What is section 45 IA of RBI Act? Can anyone tell me what section 45 is 45 IA about in RBI Act. What this section deals with? What this section deals with? 45 IA. Belamun, I'll come to your doubt. Just park it in a minute. Park it for some minutes. I'll come to your doubt because that's the in the process I'm explaining. Very good, Sumit. Yes. Very good, Uday. Very good. Very good, Tanisha. Yes. So section 45 IA basically talks about okay registration requirement and net on funds for the NBFC. So I will call it registration and NOF for NBFC. Okay. So NBFCs are required to register under section 45 IA and they have to maintain certain NOF okay as prescribed either in the act or in the regulations directions anywhere. My next question is whether all NBFCs are required to get themselves registered under section 45 IA of RBI Act. Question number one. Question number two is RBI the governing authority for all NBFCs? That is the question number two. So you need to answer both these questions. Number one, whether all NBFCs are required to register themselves under 45 IA of the Act. Number two, whether RBI is the governing authority for all NBFCs or not. Pretty simple, straightforward answer. There is nothing much difficult over here. Pretty much straightforward. There is nothing difficult over here. Come on, guys. Two questions. You need to answer both together. Come on, guys. Very good, Sumit. Very good. Venkata. Very good, Mancha. Suraj, Uday, Belamkonda. Very good. So, answer to the both is no. So most of you guys have seen said yes to the both. The answer is no to the both. Whether all NBFCs are required to get themselves registered, answer is no, not all NBFCs. There is an exempt category also. Why there is exempt categories? Because these exempt categories are governed by other governing authorities. That is, if I go to a module, that your module has already covered that particular part. If you see, these are the NBFCs which are exempted from registration. Okay. So these NBFCs are exempted from registration under Section 45 IA of RBI Act, subject to certain conditions. Housing finance banks, because these are regulated by National Housing Bank. Merchant bankings regulated by SEBI. Stock exchange regulated by SEBI. Companies engaged in stock brokering and sub-broking, again regulated by SEBI. Venture capital funds regulated by SEBI. Nidhi companies regulated by MCA and Government of India. Insurance companies regulated by IRDA. Chit companies, again, they are regulated under a specific Chit Fund Act. Specified microfinance companies, securitization and reconstruction companies, mutual benefit companies, based on the real nature of these companies, either these are governed by RBI or they may be governed by SEBI. CIC, because CIC again have a different categories and they have a different regulations, so they are in some cases they are not required to get themselves registered. AIF, again, AIF is basically again somewhere governed by SEBI to some extent, and they are also under the purview of SEBI regulations. Okay, we have a core investment companies with size of 100 crores and everything. So these are the exempt categories. Okay, these are the exempt categories. Not necessary that all NBFCs are required to get themselves registered. Clear? Any doubt, guys? Any doubt till now? Any doubt till now? So not all companies are required to get themselves registered. Any doubt till now? Any doubt? This is the base, and this will be taken forward. See, whenever we will be discussing any regulation, even the scale-based regulations, you should be understanding what I am discussing as of now. The categorization, the exemptions, and you should be having a basic knowledge of that. So you are clear with the NBFCD, ND, NDSI, these categorization, different business type NBFCs, ICC, IFC, CIC, IDF, MFI. Hmm. Yes, chit funds are also somewhere regulated by under the NBFC regulations. So somewhere, if you see, not all, but some of the NBFC regulations are also applicable to a chit funds. National Housing Board is not a bank; it's an authority governing housing companies, housing loan companies. Okay, so now what happened in even 2002 when the first scale-based regulations came into the picture? Okay, now the first scale-based regulations came into picture when in I think yeah in 2022. Okay, now what happened is till that particular time we used to classify NBFCs first based on the business, second based on the deposit. So second step was classification based on deposit. Now, these classification based on deposit were the base for application of these regulations. Remember, non-systematically important, non-deposit taking Reserve Bank of India directions. So these are applicable. So NBFC ND regulations are applicable to NBFC ND categories, and NBFC SI regulations are either applicable to NBFC D and NBFC NDSI to both. Earlier, that was the scenario. Okay. Now, after scale-based regulations, when they were announced in 2022, the picture drastically changed. Now, all the NBFCs, this categorization was before scale-based regulation. Before scale-based regulations. Now, this is very important point to understand. Why I took these classification for explanation for understanding reason, because even the scale-based regulations today use these classification, but they have created a groupings. It means what a scale-based regulation has done is scale-based regulation has created multiple groups. So I'll write it here. Scale-based regulation classification. Okay. Now, what scale-based regulation did is scale-based regulations created some buckets, some groups. I'll say bucket slash group. Understand a bucket, kind of, think of a bucket like you actually have a bucket something. Okay. Now, what they did is they named the buckets. First, they named the bucket. Okay. So, the first bucket, the bigger bucket was NBFC base layer. They were known as NBFC BL. Second bucket they created was middle layer. That was known as NBFC ML. Okay. Third bucket they created upper layer. That was NBFC UL. And the last bucket they created top layer. That was NBFC TL. Okay. And what they did is the old classification which was there of NBFC business wise, NDSI, okay, or deposit accepting, they took that classification first of all, and they group those classification in these buckets based on the asset size either based on the category. For example, base layer. Base layer contains NBFCs having net asset below rupees 1000 crores. But not only that, they said that okay, NBFC P2P, NBFC uh, account aggregator. These are the types of NBFC which were based on business. Usually they were earlier in others. NBFC or NOFHC, non-operative financial holding company. And the last one is NBFC ND. That is not availing public funds, not having any customer interface. So ND was renamed and was said that not availing public funds, means not accepting deposits and not having any customer interface. Basically, non-systematically important. Okay, so NBFC ND was reclassified as a NBFC not availing public funds and not having any customer interface. It was just a name change. So those NBFCs were put under the category of BL. So I took the old category and I just clubbed it in a one particular bucket. That's it. Middle layer. So middle layer consists of first NBFC D. All NBFC D are part of middle layer. NBFC ND, but net asset more than 100 CR. Oh, 1000 CR. So first was NBFC D, ND, but more than 100 CR, because less than 100 is going to the base layer. Okay. Then NBFC SPD, that is standalone primary dealer. NBFC, your IDF company. Okay. NBFC IDF, that is infrastructure debt fund. CIC, NBFC, CIC, NBFCs, or basically you can call it as a housing finance companies, HFCs, NBFC, IFC. All these were classified under your middle layer. All these are classified as a middle layer. So what I did is I took this classification, categorization by business type and by deposit by type, and I broke into two categories, base layer and middle layer, and I segregated between both of them, like bucketing. Third was upper layer. Now the thing was, upper layer NBFCs was not, it's not a simple, classification based only. But NBFCs, like, upper layer is based on a scoring methodology. So NBFCs here are NBFCs here are added based on scoring, like top 5, top 10, top 20 NBFCs, kind of like that. Okay, there are various scoring methodologies. Based on scoring methodology, the NBFCs are classified in NBFC are basically classified under upper layer based on the scoring methodology which is there. Okay. So that was NBFC upper layer to be kept on an upper layer like top 50, top 20 NBFCs, kind of that. That was the upper layer of the NBFC. Now the question came is what is for them the top layer? So NBFC top layer is usually this category or this bucket basically. This category is usually required to be kept empty. This category is required to be kept empty. Usually, this is required to be kept empty. However, RBI with notification can classify a NBFC from upper layer to top layer for additional monitoring. So, and this is done where RBI is of the opinion that there is substantial substantial risk or substantial increase in the potential systematic risk. Means what they are saying is when RBI thinks there is an increase in the risk is higher, pick that NBFC and move to the top layer. Now, top layer is created from upper layer only and they have additional regulations. So, why these bucketing were created? Because, as the name suggests, scale-based regulation. Based on your scale, you will be regulated. Means, if the entity or if the NBFC is falling in the base layer, lesser regulations will be there. Lesser stringent regulations, compliances and everything will be there. If the NBFC, gradually the NBFC moves toward the upwards, the regulation will increase. Middle layer, upper layer, top layer. Compliances, stricter monitorings and everything. So if I just tell you with an example, I'll just show you with an example what I want to say here with respect to the regulations and everything. Okay. Now, let's say for example, I have done some categorization with respect to the layers. I'll increase the size of this triangle. So that I will be able to explain you in much more detail. Let's say you have this one as a base layer where majority of the NBFCs will fall. Then you have NBFC middle layer where good amount of still NBFCs will fall, but they will be good in size. Now this is I'm talking about with respect to the quantity, numbers of NBFC, population kind of, you can say. Here it will be NBFC upper layer and NBFC top layer. Now it's like a pyramid. At a lower level, you have a higher number of NBFCs, and at the upper level, you have a lesser number of NBFCs. Now, when it comes to the regulation part, the regulation part is something which is reverse of this particular scenario, which is what you say, reverse of this particular scenario. And how, I'll show you. What will be the scenario? The more you will go upwards, this is the level of regulation. The blue category is the level of regulation. So for NBFC BL, it will be lower level of regulations, monitoring and everything. The more you will go on the upside, it will be higher level of regulations for on the top level. So if you go up, you have high compliance, monitoring, regulation. Okay. And vice versa. If you have, on the lower side, the population is high, but you have a lesser level of regulations. Because these are not important NBFCs. These are systematically what you say, not important. These are not customer facing. You have a more number of NBFCs in a base layer. So population wise, if I talk about, population will be less in NBFC top layer compared to NBFC base layer. Not only population, but instead of population, we can also say turnover, activity, scale of NBFC will be less, will be, what do you say, less in bottom layer compared to your top layer. I'll remove the population from here. Okay. Turnover, activity, scale, then you can say net asset will be less in base layer compared to the top layer. So the more you will have the turnover, activity, scale of the NBFC, the more category you will fall into, like upper layer, top layer, compared to what you have now. Okay, so that was a revamp which was done from the existing categorization before scale-based regulations compared to what it has been done after the scale-based regulation. Materiality will be, materiality will be higher in the top layer. See, think about a scenario. If I talk about NBFC, which is a presence, has a presence across India, they are giving a lot of loans, consumer loans, durable product loans, mobile loans, vehicle loans, and everything they are providing. It's a very well-known and renowned NBFC. I will categorize that NBFC into the upper layer because it has a higher scale of business, higher customer interaction. More people are interested. Shares listed on security markets, taking deposit from the public. So that will be on the higher side that is NBFC UL, or it might come into the TL category also based on the RBI's opinion. But if I talk about an NBFC, which is very small, not dealing into loans, might be dealing into loans, but not dealing into the deposits, not having much customer interaction, it is a small NBFC, okay, for a specific purpose, then that NBFC will fall under the base layer rather than going into the middle and the upper layer. Now, why we have a scale-based? Now, as the name suggests, scale-based regulations. Based on the scale, like base layer, upper layer, middle layer, or top layer, based on that scale, okay, regulations will be applicable. Earlier, regulations were either applicable based on the business type or they were applicable based on the deposit type. Understand the difference between both. Earlier, I used to have a CIC regulations, I used to have a IFC regulations, I used to have a ICC NBFC regulations. So business type regulations were different. Then we used to have a NBFC ND regulations, NBFC SI regulations, and based on the deposit type. So two type of regulations were there, and they were applicable to a particular NBFC. So let's say, for example, if NBFC's IFC is there, okay. If NBFC Infrastructure Finance Company, okay, if one of the NBFC IFC is there, let's say that was a deposit accepting, then I used to apply the specific business type regulation which were applicable to IFC, and I used to apply NBFC deposit taking regulation also. Systematically important, non-deposit taking and deposit taking regulation. The second one, NBFC SI regulations. But after November 10, 2023, this whole scenario has changed. Now, instead of business and deposit type, I only need to see the bucket where the NBFC is falling. And based on that, I need to apply the regulation. This is how the framework will work now with respect to the NBFCs. And if you see in your module also, this is the categorization is already given, the scale-based regulations. So this is a scale-based regulation, a revised regulatory framework announced in 2021 and effective from 2022. Okay, it is already in effect from 2022, but in 2023, November 23, it got a got major changes, major amendments. So this is very important when it comes to the classification. Important and new classification of NBFC. You will be able to understand this classification only when you know the old classification, because what has been done is they have just created a buckets and have put the old NBFCs into that bucket. So that's why it's very important throughout this particular chapter to have the understanding of both the classifications, because whenever we will be discussing any particular regulation, both references will be given of non-deposit accepting systematically important or something like that, or base layer, middle layer, top layer, upper layer. This particular scale-based regulations are applicable from 1st October 2022. So they are applicable for May 24th. Scale-based regulations, which is given in your module. Okay, so this is applicable already from 1st October 2022. So all the references of NBFC ND, that is non-deposit taking, shall mean NBFC base layer. And all the references of NBFC D, NDSI shall be means upper layer or middle layer based on the classification that will be done. IFC, HFC will be included in middle layer or upper layer. based on the classification. Again, NBFC, IAC, ICC, MFI, NBFC factors, mortgage guarantee companies are, could lie in any of the layers based on their net own funds, based on their structure, depending upon certain parameters. But NBFC P2P, AA, accounts aggregator, NOFHC, NBFC without any public funds, customer interface, always remain in base layer. Now, without public funds, that is ND, and without customer interface is a non-systematically important, NSI. So NBFC ND basically will fall under the base layer. Clear? Any doubt? So there is a difference between both, which has been given, some difference between bank and NBFCs, which has been given. But you guys are clear with this classification now? Any doubt with this classification? Because this is very important classification and this will be base for all the discussions that we will be doing under the NBFC. Any doubt, guys? Any doubt? Very important part, very important topic of classification of NBFCs. No doubt? Okay. If no doubt, let's proceed further and understand one more topic over here. Now, as we have seen, these classifications are there. So along with these classifications, there are some other regulations which are applicable to an NBFC. Okay. So these regulations are with respect to the audit, reporting, and with respect to the roles and responsibility of an auditor in an NBFC. So these regulations, what we have discussed as of now, are applicable with respect to the working of NBFC. Okay, these informations are related to the working of NBFC, not audit of the NBFC. But there are separate regulations which are applicable for the working of the NBFC. Auditing and reporting of the NBFC. So again, earlier they were part of different regulations. Now again, they are trying to bring everything under one bucket, that is the NBFC scale-based regulation. But as of now, we will see a different regulation in that category also. Okay, we will see a different regulation in that category. Basically, if I talk about with respect to the audit, it is a master direction again of NBFC. Now I'll just provide regulations of audit for NBFC. So the first regulation which is applicable for the audit of the NBFC is NBFC Auditor's Report, Reserve Bank of India Directions. Reserve Bank Directions 2016. Okay. So NBFC Auditors Report, Reserve Bank Direction 2016. One of the directions, or you can say rules applicable for the audit report. So what is the scenario? How to what are the things that are required to be provided in an audit report? So very important regulation that we will be discussing, that is governing the audit report and what is required to be reported in the audit of NBFC. Okay. So these were the 2016 directions. Then there are NBFC Financial Company Return. NBFC Financial Company Return, Reserve Bank Directions 2016. Now again, these directions contain some of the returns that the NBFC is required to file, and auditor has to certify upon those returns. So again, very important regulations where we will be seeing what are those returns where auditor has a specific roles and responsibility. Okay. Over and above that, we already have a scale-based regulation. Okay. Now, scale-based regulations again also have some requirement with respect to the you can say disclosure of that NBFC is required to do while preparing its financial accounts and financial statements. Okay, so reporting format is given in scale-based regulation also, but that is again specific category wise, base layer, middle layer, upper layer, and specific. It's not the main schedule 3 like format given, but it is given that okay, along with that, what other information or minimum information is required to be given. Okay, so that was one of the part with respect to the regulation for the audit of NBFC that we will be understanding. Any doubt till now? Any doubt, guys? Any doubt? No? Okay. If no further doubt, that was an introduction to the special features in the audit of NBFC, and that is a base that we need to build up for the next lecture. In the next lecture, I will be discussing in detail these regulations, what is the roles and responsibility of the auditor in case of NBFC, because it's very important for us to understand, first of all, what is the regulation, what is the basically, my roles and responsibility, like we have 143 subsection 3 in the company act, same way what we have in NBFCs. Okay, the way we have section 143 under company act, something like that we also have under for NBFCs under these directions. So we need to understand these directions in detail. Okay. If no further doubt, guys, I'll suggest we keep it till here. In the next lecture, what we will be doing is we will be carrying forward the discussion from here, and we will be discussing different regulations or the different part of the directions that are important for the auditor. Okay. But for that, please read the chapter in detail. Read it so that you can understand when we will discuss. Okay. Okay, guys. If no further doubts, thank you. Thank you for your time. I'll see you in the next lecture. Thank you very much. Yes.